Hello traders, Gary Wagner here, approximately 10 a.m. in Honolulu. It is the 9th day of November, Wednesday, and this is the daily report for gold and silver. We have seen this market increase in volatility over the last week. Today is no exception, and we have a market which was nominally higher throughout the trading session last night into today, down a little bit, but it began to come down hard as we saw a major slip in the equities markets overseas, down about 2%. Follow through in our Standard & Poor's. That's the first market I want to look at today. That's down hundreds of points. I believe it's down about 387 points. It was down over 400 points this morning, and you can see that we are looking at a daily chart of the Standard & Poor's 500. This one-day move is giving back gains that took roughly 1, 2, 3, 4, 5 an entire week to achieve. In other words, we saw this market good support right around 12.15 right in here. In terms of straight candlestick patterns, we get this piercing line. That's what this is, kind of a harami because it didn't open below. But then you get this gap higher. You get a couple of days of almost identical candles in terms of range, but a lower close, a higher close compared to the open on the daily chart. It pops to the top, finds resistance, no doubt, and is coming down hard. This is the reciprocal action to strength again in the dollar. When we take a look at the dollar index, this is the December contract, you can see this incredible market in which it has closed near the highs, opens because it's a market in which you have a continuous contract, this of course being the December, but you can see that this market has just been runaway. More importantly, in terms of the runaway market, is the fact that these various tops right here, which were really resistance in the market, have been taken out. Your next real point of resistance is just about, call it 78.70, 78.60. That would be this, and of course these record tops up here. Incredible moves in these two markets. Now, what has that done to gold and silver? Well, it has put both under pressure. I'll start with the silver market. We talked about the fact yesterday that what really concerned me more than anything else, I believe that gold and silver kind of trade in tandem. They trade in tandem with silver following gold. It's the little brother, so to speak. However, we talked about the fact that unless we can see this market take out, and this is not the first time we've discussed this, I think we've talked about this each and every day over the last week, but without taking out this $35 area, I deem that to be absolutely critical, essential resistance that needs to be overcome. We can't even look to go to this next target. My next target's right around 38, and then my last target's around $40. These are the two targets that I think are still possible in the market, but I think we might see a corrective wave prior to hitting that. You can see that without a doubt that as this market trades up and trades higher into this area, you get a real strong sense of resistance right here. You can see the resistance right in this area. This is, call it $33 per ounce, $32.90. But we have not been able to overtake that resistance. And right now we are sitting in a marketplace which is under significant pressure. Now, we have stops in the markets, and the stops are literally below this particular support level, which is right in here. And my sentiment is that we should be able to see the market hold to that area. Again, we'll have to see what happens over the next couple of days. To the gold market. Gold, I think right now, is still poised for a tremendous upside move. We've obviously got a corrective states here, currently trading off $15 to $17, $17.71. Current print, as you can see, it is trading near the low of the day. We have stops just below this. I'd have to check, but I believe it's around 68. We're in at 39. It takes us out with a nice profit should our stop get hit. But It's all about Italy right now. And the key with Italy is, as we talked about yesterday, there are true distinctions that differentiate Italy from a country like Greece. It's the eighth largest power in terms of economic power in the world. It is not a small producing country. Their debts are dramatically different, and the inability for the IMF or the EU or any governing body to bail them out of a scenario like we see with Greece, simply put, it's not possible. There's not enough money in the European Union central banks to bail Italy out. It's that large of a powerhouse. So the fact that there is uncertainty once again, and Italy's adding to this mix. Italy, of all of the countries, when you think about Spain or Portugal, Ireland was talked to have some issues, and of course Greece. But of all of those countries, the one country that we really need to cross our fingers and see them do something constructive and change the scenario with the sovereign debt crisis is Italy. The Italian bonds, the yields on those right now are unsustainable. The country simply doesn't have enough money to pay those back. And so you get this tremendous uncertainty. And what happened today is you had very, very weak bonds, and it really set into motion this fear factor. The flight to quality, again, went to the dollar. And with the sell-off in the equities markets and the strength in the dollar, you've got this carryover where gold is not benefiting from that safe haven investment mentality, which, quite honestly, astounds me. It makes sense. It makes sense in that when you have this mass liquidation, you get a scenario like that. Now, the market has sold off pretty hard right now. As you can see, it sold off to about 1766.65. It is selling off quite hard. We have just pulled profits on our one position, and that's okay, because my sentiment right now in terms of where I think this market could go to and what I think we will see is, it's been my belief that we've had this 1, 2, this is probably going to be 3, 4 is going to take us down a little bit, and it will be wave 5 that takes us over $1,800 per ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.